Well, hello again, traders, and welcome out. This is Sanket from Maverick Currencies here, and this is a market recap for Monday, November the 28th. So let's get into it. Let's get back to the routine. Hope everyone had a good Thanksgiving weekend, and I know it was a holiday shortened week, so this is definitely where the liquidity kind of dries down, market volatility kind of goes down. So as we are getting back into the full swing of things here, let's see how the market moved in the first 24 hours of this trading week. So market actually started off in a much rockier note as it was last week. We were seeing new highs, decent highs in the markets here, and actually we're seeing a nice little pullback going into today. So the price action was not encouraging, and there was a whole lot of news that really caused that happen. Over the weekend, we had some turmoil or some unrest in China, some protests that really was a bit of a negative factor for the equity market. So you can see market had a very nice little candle to the downside. We got a nice little pullback here. I mean, at this point, instead of trying to break out, we are now back within this little range that we're dealing with. So I think at this point, based on this technical structure, it looks like the market can easily pull back further down to the support line here. So this is where we need to look at the headlines here and see what's causing these moves. So we have a few things that really went against the markets today. We talked about the protests in China. We had this turmoil in cryptos that continues. If you take a look at the crypto markets, I mean, we had another bankruptcy, I think, today from BlockFi, another company that's going under. And again, not a good news. So if you take a look at this chart again, cryptos are not really a safe place to be. I mean, a lot of volatility, a lot of movement. So the kind of turmoil continues here in the crypto world. And then lastly, we had some Fed members that came out and were actually a lot more hawkish. So now, again, we are just seeing this markets where Fed continues to be hawkish. And then we have markets that are just getting ahead of itself and trying to account for a Fed pivot or a bearish Fed. And I think that's really where these two moving forces are in the markets. And I think right now the Fed comments are definitely more hawkish. So I think this is, again, a perfect mixture for markets to pull back. Again, a similar theme across the world. Again, not just the U.S., but World Stock Index. Again, they're all down as well. So again, market have seen a very nice recovery in the past month and a half. So I think at this point, we are trying to get above or get into this little resistance zone that we can find out when we especially go into the longer term charts. But this is again reaching a very key resistance zone, which again, earlier this year, twice we have rallied this much, and then both times we kind of unraveled and gave up all those gains. So we are not out of the woods yet. I mean, we are in December. We will be in December, and again, we are going to be going through another FOMC rate decision. We'll be going through another CPI numbers, and this year can really end either on a positive note, again, maybe kind of running into the December, or we can see the total opposite, where market just sells off into the year end. So again, both case scenarios can happen, and I think we'll have to kind of wait and see what the CPI numbers and what the Fed statement will kind of bring it to us. So if we take a look at the markets overall, again, I think I was definitely a lot more bullish till today or till last night. I think now I'm looking at a little bit more. I brought the score down to a +1. I think we're still above the 20 and the 50, but I think we can easily test some support over here. And I think at this point, based on with the levels, I think the risk to reward looks a little bit better, more to the downside than to the upside. Again, this week we are returning to full schedule week. So again, a lot of things that we will be paying attention to. As you can see that a lot of this starts with Tuesday. We have GDP out of Canada tomorrow. But more importantly, I'm actually looking at this U.S. JOLTS job opening a number on Wednesday. We have the PCE price index on Thursday. Remember, this is again a preferred number that the Fed looks at over CPI. So this is something to pay attention to. And on Friday, we have the U.S. and Canada jobs report. So this is a very busy week ahead. So we just have to kind of pace ourselves here and then look at the individual days and see what's really likely to move around those times. On Thursday, I'm actually looking at the CPI number out of the Swiss franc, out of the Switzerland as well. But I think that's another number to pay attention to, especially a rising inflation would trigger the Swiss bank to be a little bit more hawkish, as they have said in the statement. So this week, again, busy week, excited for it. We started off with already a good movement, and I think we'll probably see a continuation of that in the next 24 to 48 hours. So let's do a quick currency analysis and see, okay, what was the biggest mover today and what we need to pay attention to. So let's go into the crypto world. And as you can see, crypto world, again, paying across the board. There's no way better to slice this. Again, we have certain cryptos that are actually getting more hammered than the other, but overall, the crypto space, I think, is not out of the woods yet. I think there's a lot more further downside, in my personal opinion, as we start to get more unwinding of this FTX collapse, and we have other now companies are coming out and filing for bankruptcy. So watch out for the crypto world, but let's pay attention to the currency world, because again, we have decent movements across the board. I mean, take a look at a day like today. Dollar and yen both are strong. So we are seeing risk off. We have the risk off sentiment today, and the yen and the dollar did both go up. So that's a good sign. Again, we have seen this negative correlation between the yen and the dollar. But again, we are seeing just one day where they kind of did the same thing. Yen was actually a bit more stronger, but I think at this point, you just really had to pay attention to risk off versus risk off theme. And I think at this point, both the yen and the dollar seems to be taking part in it. And then where the pain was in the best performing area. So in the last few weeks, what has outperformed? Aussie has outperformed, Kiwi has outperformed, and the pound has outperformed. So that's where really the pullback that occurred today. Currencies like CAD was actually mostly flat. We had the euro, which again had a nice move early in the day, but then did pull back. And the Swiss franc actually holding is steady on number 3 as the safe haven currency. So again, this is a theme that we are noticing here, and we're likely to see this continue, especially if we start to see this pullback continues. And again, remember, we have seen massive rallies in currencies like Kiwi or in the Aussie. Even if you pay attention to Kiwi dollar, I mean, we have seen about a 9 to 10% move just in a short period of month. So I think at this point, we have some sort of correction risk over here. And also, it's worth taking a look at some of the yen crosses as well, like the Aussie yen or the Kiwi yen. So as far as the velocity goes, this is where we are. We are seeing good velocity in the dollar and the yen, and we are seeing the negative velocity in the Aussie and Kiwi. So I still like these two pairings going in the next 24 hours, as I think market is likely to be a little bit more under pressure. Again, I think market has done really well in the past few weeks. I think at this point, we'll probably consolidate some losses and maybe head lower. We have some currencies that are kind of in the middle here, like a CAD, which can really swing either way, velocity-wise. But I think the best pairings are these two on the far right and the far left. In between, we had the pound as a -1. I like this one as well because, again, one of those currencies that's done really well, which, again, stand at a risk of a bit of a pullback. So we always see this kind of thing where some things get bid up, and then we start to see some sort of profit-taking and money sort of coming out of it. So I think that's really where the movements are. Euro and Swiss franc, they're +1. So again, those are the other pairings that we can pay attention to. But I think if you're trying to decide between the euro and the dollar, or the euro and the yen, pay attention to these pairings. Right now, euro dollar rejected that 104 again. So I think at this point, dollar seems to be favoring more compared to the euro. So let's talk about possible trades. See what else we can find technically in the next 24 hours. And as you can see on the chart here, again, the big focus really is, okay, what we need to pay attention to in the next 24 hours. And again, dollar had made a nice little recovery today. But notice that on a 4-hour chart, the dollar still looks pretty terrible here. Considering where the dollar used to be and where the dollar is, we have seen a very hefty correction in the month of November. And remember, all of that really came off that CPI report. So we still have another CPI report to go in the next couple of weeks. But I think until then, the dollar is just likely to consolidate or maybe drift a little bit higher, especially if the risk-off sentiment continues. Now, looking at the yen, that yen looks actually much better for the first time. I mean, 2022, this yen got obliterated across the board. And again, we are now noticing the yen do a little bit better. I think at this point we have the resistance here. The way I would like to see the yen to recover is to pay attention to these key levels. As we start to clear out these levels, I think there's definitely more upside. But I think we need to clear out these levels to really advance another run higher. But at the same time, I think dollar and yen can actually do the same thing. They can both advance at the same time. So it's a matter of what you want to pair it with. Again, if you take a look at the Aussie, I think Aussie looks much better to me. Again, if this Aussie movement here, I mean, in the past a week or so, past 2 weeks, I mean, as you can see that this thing collectively really hasn't gone anywhere. But we have something like the Kiwi, which has done really, really well in the last month and a half. So I think there's definitely a little bit more risk in the Kiwi. But if we go with the relative weakness, the Aussie actually kind of stands out there. So I think they both kind of stand a chance to lose a little bit here. If the risk-off sentiment continues, and I think currencies like, I mean, look at CAD. CAD is also like kind of downtrending here as well. So, I mean, CAD does not look good here. But again, it depends on what kind of price action can we expect. I mean, on a daily chart, we've seen a nice little kind of recovery here in the CAD. The RSI is sitting at an oversold level. So I actually would love to see this CAD kind of have a bit of a rally. Maybe try to retest its prior resistance or prior support, now resistance. And I think that will create another good shorting opportunity. I think right now, I don't really like to short CAD here because, again, CAD can easily catch up with some of the strength with the dollar. And I think in that case, we need to kind of play what's the dollar instead of the CAD. But outside of that, I think I think we'd probably be better off with the dollar, maybe some short-term relief in the CAD based on where we are. So I think, as you can see, the Kiwi is sitting at an overbought zone. We just start to pull back a little bit. So there is that little areas where we can see some more quicker price action. So let's take a look at which pairs that we really like here. So let's go with Kiwi dollar. Let's see how Kiwi dollar looks. I mean, nice little pullback here. I mean, this uptrend has been intact. I mean, if you just take a look at this 13-day moving average, the exponential moving average, we have been above it pretty much since October. So if it breaks below that, I think that's where I will like it a little bit more further to the downside. 61 is really where that area is. If it breaks that, I think there's a nice little move that we can see in the next few days. I mean, remember, a significant break around those levels can spark a nice little move to the downside. Now, let's take a look at the Aussie dollar. And Aussie dollar is already sitting at this moving average there and the parabolic SAR. So I think a break of that would trigger a little bit more bearish price action in the Aussie dollar. So I really like this as well. And again, daily chart looks bearish or looks like it wants to roll over. And on a 4-hour chart, I mean, you can see where it established a lower high and looks like it just wants to head lower. So I do like the Aussie dollar furthermore to the downside. Now let's take a look at other crosses like the Aussie yen. And you can see that this chart looks a lot more bearish to me here. I mean, we have this drop here, a little bear rally, another drop. So I think at this point, if you're not sure what the dollar is going to move or the yen is going to move, it's very easily we can kind of allocate half a position size in Aussie dollar and half a position size in Aussie yen and see which one would move. That's also a good way to kind of diversify your risk, but then just not putting all your eggs in the same basket, especially if you don't have an idea what the dollar yen is going to do. I mean, if we take a look at dollar yen, it's been very volatile lately. I mean, we have seen it continues to test this level here, the support level at 138 below 137. As you can see that last time we did break below that, we recovered, and we had a nice 4-day rally. Again, we're seeing the same thing today. It did pull back and coming out with a bit of hammer candle. So I wouldn't be surprised if we start to rally a little bit from here. So maybe in the next 24 hours, we can kind of take a look at the dollar instead of the yen. But that's just the technical setup we have here. Nice little support that we are continuing to test here. So I think maybe we can see a bit of a rally to the upside. We can also pay attention to other crosses like euro dollar today. You can see that we got a nice little fake breakout today. Look at the candlestick today, was not an encouraging candle. So at this point, again, very similar setups among other dollar crosses. I think you can pull back down to the support, which is about 102 area. So again, this is not one of the bearish ones, bearish chart here. We can also take a look at dollar CAD. I think I like this very much here. It's interesting that, you know, it's almost now retesting the prior resistance, which is prior support, which is now the resistance. So I think if it gets above this 135 area, then it's dealing with the upper range of 138 to 135. I mean, so far you can see that this thing is moving very much in this technical setup here. So if you're trying to play the technicals, I think that's what really the technicals are showing it to you. We can also take a look at dollar Swiss franc. You can see that there's a nice support here on dollar Swiss franc at 94. This area has held quite a few times so far this year. I mean, let's go back. I mean, this is a very strong support, which again, but this is a big breakout area we had back in April, which is not support. So I think as we take a look at a lot of the dollar crosses here, they also seems to be kind of stalling here a little bit as it's really approaching some key levels. So I think if you're playing these key levels, I think risk to reward looks good over here to play a little bit more of a short-term rally in the dollar, and then we can see some pullbacks in other currencies as well. So again, if you're paying attention to some of the levels to break, then again, look at this 13-day exponential moving average, take a look at the parabolic SAR, and if it does break below it, I think there's a decent chance to catch a nice little trade in the next 24 to 48 hours. So that's the game plan here. In conclusion, we are looking at dollar yen likely to strengthen off this risk off sentiment. So play what's moving. I think right now, dollar yen, they're moving. Aussie and the Kiwi, they're moving. So pay attention to those. And outside of those, if we see more opportunity elsewhere, that's really where we want to be active. And again, this week is a busy week with some key economic events. So make sure you're putting that on the docket as well. Till then, take care, and we'll see you in the next update. Cheers.